Hello everyone, welcome to our channel StoxFactor. Hope you are doing well. Friends, in this weekly video, we are going to discuss the Bank Nifty and Nifty analysis, and we are going to see the levels of Nifty and Bank Nifty for the next week. So without wasting time, let's get started. So now we will quickly jump to the index analysis page. So friends, we are into the index analysis page, and before we start with the analysis, as you already know, that this analysis is for learning purposes, so that you can use this learning in order to do your own analysis the same way to identify high probability trades. So let's begin with the analysis, and we'll quickly start with the levels of Nifty. So the most important levels are the maximum support and maximum resistance, which can be seen as the maximum call OI, which is at 18,000, and the maximum put writing is at 17,000. So from here we get the very important levels of Nifty of maximum resistance and maximum support. Now we will quickly look at the futures data, especially the last 2 weeks data. What is the trend? So as you can see, after a lot of short positions and unwinding, now we are seeing some long build up in Nifty, and this is a positive sign. From the past 2 weeks we have continuously seen some long build up in Nifty, and same can be seen in the daily trend also. Now let's look at the option data, starting with the PCR data. So in the PCR data, we can also see that from the past 2 days, there has been a sudden jump in the PCR level along with the price. So this poses us a positive signal that when the PCR rises with the price, it means the puts are being written more as compared to calls. Similarly, you can see the same trend in both the weekly put call ratio and in the monthly. So this is the total. So all these three are in sync. So it gives us a signal that now any dip is being utilized to write more puts, right? So now we can also see the important levels which we see above 18,000 and 17,000. Now the most important thing is to quickly look at the option chain, because the option chain also give us the intermediate levels and the first support and resistance levels apart from the maximum support and resistance levels. Because we show here the cumulative open interest, so this helps us to understand the important levels. We already saw that important levels 17,000 and 18,000 posing as the maximum support and maximum resistance. But now coming to the 17,500 strike, you can see here clearly, we can see a straddle buildup. It means both puts and calls are being written at almost equal proportion. So we can see the strike price put call ratio is at 0.96, very close to 1. So it means for the next weekly expiry, a straddle has been written, and we can identify a range for Nifty using this straddle. Now if we quickly filter only on the next weekly expiry, that is 16th December data. So now here we can see that again we see the same pattern, that 17,500 there is a straddle playing out, and we see the important levels again 18,000 maximum resistance, and we see some support level at 17,200 and 17,400 also. Now if we again select the whole expiries to see the cumulative open interest, so we get the important levels. Now let's see what is the price of the option at 17,500, because we know that there is a straddle, so we can identify a range for Nifty using the price. So if we hover over here, so we can see 136 is the price for the call and 113 is the price for put. So if we combine both of them, so around 250 rupees on the downside, that is 17,250, and on the upside, that is 17,750. So this gives us an important and immediate range for Nifty for the next weekly expiry. So any dip towards 17,250 to 300 can be utilized as a dip to either buy in cash market if you are a cash market player, or if you want to buy options for Nifty, you can put a stop loss below 17,250, that is around 17,200, and you can buy an option, because there are chances that the price can bounce from there, because put writers are active and they will incur losses if the prices go beyond 17,250 on the downside. So that will act as a support, and we will obviously put our stop loss below 17,200. Similarly, on the upside, we will see 17,750 as a immediate resistance. So any bounce towards 17,700, we can utilize that to exit any current position, or if we want to take any fresh position on the short side or buy any put, we can buy with the stop loss just above 17,750, that is around 17,800. So this is the immediate range for the Nifty for the next week as per the current data. Now we have to follow this data obviously on the next trading day till Thursday, right? So in this way, you have to understand the price and you have to Combine both the OI and the price of the option in order to identify the range for the Nifty. Now also seeing the future data at last, if we see on the last day on Friday, there wasn't much activity, very small long unwinding. So whatever happened on Thursday, the same range near about the Nifty closed very much close to the same price which was on Thursday. So this generally happens if there is no new news on Friday. So whatever levels are on Thursday, the Nifty or the market closes somewhere near about the same levels which are on Thursday. So what means is whatever trend is set on Thursday, the same is likely to follow on Friday if there is no new event in the market. Now very important point that as we have already discussed in the past, that whenever we do analysis of Nifty and Bank Nifty, we also need to analyze FII's derivatives data, which gives us a clear picture for the near term trend. But before that, we will quickly look at the Bank Nifty levels also before we finally do the analysis of FII's data. So now we have selected Bank Nifty, and let's quickly look at the Bank Nifty levels. We have 38,000 as the maximum resistance and 37,000 as the maximum support. Now if we see for the past 2 weeks, we have seen a huge short covering on Bank Nifty. So this is a positive sign as far as the Bank Nifty is concerned, because after huge short build-up, now we have seen short covering in the Bank Nifty. So we can expect the same to happen in the coming week also. So now we can also see the same trend in the daily chart also. Now if we come to the PCR, again we are seeing the same trend as we saw in Nifty. PCR rising with the price. So the trend is in upward direction and price is also in upward direction. Same can be seen in weekly and monthly put call ratios also. So all these three are in sync as of now. Now if we look at the option chain, so let's quickly look at the Bank Nifty intermediate levels, that is the immediate levels, and the maximum levels we have already seen 37,000 and 38,000. So there is a 1,000 point range for the Bank Nifty. So this we can see the cumulative open interest. Again we see a straddle here similar to Nifty at 37,000. Now if we quickly look at the weekly data, so in order to understand the level for next week, we can also select the weekly expiry data also. So again we see the very same pattern which we saw in the cumulative open interest. 37,000 that is maximum support, 38,000 that is maximum resistance, and we are also seeing a straddle at 37,000. Now if we select all data, so again we will quickly analyze the important levels. So again after 37,000 we have the first immediate support at 36,500 and immediate resistance at 37,500. So this 1,000 point range will define a range for Bank Nifty for the next week. Any dip towards 36,500 can be utilized as an opportunity for buying by putting a stop loss below 36,500 and same on the upside, and we can exit our existing positions at 37,500, and if this level breaks, that is 37,500, we can expect the Bank Nifty to go near 38,000. Now if we quickly look at the option prices for the 37,000, that is the straddle which is being played out. So we can see 37,433 and 298, almost 700 points range. So 700 points on the downside and 700 points on the upside. So again a very high level range which we discussed, 36,300 to 37,700. So again that roughly 1,000 point range is coming out. So what we discussed, any dip towards or below 36,500, putting a stop loss below 36,300, we can utilize that opportunity for buying. And on the upside, the range between 37,500 to 37,700, that 200 point range can be utilized to exit any existing position or to buy puts if you are making a view on the downside by putting a stop loss above 37,700, that is near about 37,750, right? So this roughly 1,000 to 1,200 points range gives us an immediate level for the Bank Nifty for the next week. So now we have understood the Bank Nifty levels for the next week. Now quickly looking at the futures data, we can see that on the last trading day, some long positions were being made on Bank Nifty. So if we hover over the last trading day, we can see the low price was around 36,800. So this again gives us a first level of support at near about 36,800, that any dip towards 36,800 can be utilized as an opportunity to buy, keeping the last day low price as a stop loss. Now if that breaks, we already discussed the next level, that is 36,500 and 36,300. So these are the important levels. So in this way, using this data, you can also make a level for you to put a strict stop loss, right? So friends, in this way we have to analyze the data. Now last but not the least, as we discussed, we also need to understand FII's derivatives data before we take any view on the overall index. So as you can see that, let's quickly go here. So we have seen slight reduction in puts and slight increase in calls on the overall trend side we are talking about. Now if we see the detailed table, still we can see that the future long index ratio is 67%, which is again a healthy ratio if we talk about the total long positions. So FIIs are on the bullish side of the market on a macro level. Also we can see long positions being built on the future side. So what FIIs are doing, they are selling in the cash market to bring the market slightly down, and then they are making long positions in the futures of the stocks. And we have seen this trend from the past few days. We also discussed this in our previous video also, that we need to monitor this activity. Now we have also seen slight reduction in FII selling, because earlier they were selling huge in cash market. Now they are still selling, but they have reduced the intensity of the selling. So if we quickly look at the cash market data, we can go to this tab. So we can see there, as you were seeing, the selling was quite high. Now they have slightly reduced the selling, but instead of 3000 crores or 4000 crores, now they were selling around 600 crores or 1000 crores. So we need to monitor this data, very important, that if this pattern continues and if they continue to sell slightly in cash market and accumulate long positions here on the stock, then at some point, maybe next week, we can expect the FIIs to stop selling in the cash market, and then they can turn the cash buyers also in order to take the prices higher, so that they can get benefited from these positions. So we need to monitor these positions very importantly, especially the stock futures and then the index futures also, in order to understand their overall view on the market. So as of now, seeing this data, we can make a view that it is a buy on dips market. So whenever we get a dip, by putting a stop loss, we can use those levels to accumulate in cash market if you're a cash market player, or you can make derivatives positions if you're a short-term trader, right? So friends, with this we come to the end of this video. If you have any questions regarding this video, please post your questions on the comment section and we will definitely answer your questions. And if you have not subscribed to our channel, please subscribe to our channel so that you can get the notifications of such videos which we post every week. And if you want to get the access of our dashboard, please visit our website www.stoxfactor.com. We have mentioned the subscription plans in detail in our website, as you can see here also. So friends, see you in another video. Take care and goodbye.